Hey guys, and welcome back to the Matt's a Million channel. In this clip, I'm going to be breaking down, in my opinion, what the don'ts are when you're trying to get prop funded. I'll be breaking down what people are doing, what I'm seeing as the current issues, and what a tangible route/solution would be, in my opinion, to stand you in the best chance of success. If you are new around here, my name is Matt, and I do cover all things personal finance and day trading, so if that is your vibe,
then click subscribe.
So what am I saying is the don't and to stop doing? Well, it's to go ahead and buy challenges on the basis that you think you could be able to pass it, or you've shown a few signs where you feel that under the pressure suddenly everything's going to change and you're going to make it. What I'm saying is you don't touch a challenge until you know that you can hit those stats in live, real market conditions with live money. That is the biggest don't. Do not just go head first into this challenge model, because you're going to end up losing a lot of money, losing a lot of confidence, and then start playing the blame game. Now, what I've been seeing lately is so many people are fixated on getting to that big capital prop firm funding like they're seeing on YouTube or that they've seen on Instagram in their quest to try and become financially free in the quickest possible time. But one of the biggest things that I've seen that is absolutely insane is just the sheer amount of challenges and challenges bought that people have done without actually either passing the challenge or passing the challenge and verification, or even getting the live account, or even getting a payout. It's crazy the amount of money that is being spent here of people that don't even get to a point of receiving anything back. Now, my point here isn't to dissuade you from prop firm funding. Obviously, I've got it and I do advocate it. I think it's fantastic and a great tool that wasn't necessarily in the mainstream prior to around sort of 2 or 3 years ago. But people are not passing a lot of those challenges, and I want to identify some of the reasons why and what you can do to get yourself in a position where you set yourself up for success. Now, first of all, I think that the prop firm parameters do generate a good trading behavior, i.e. you need to hit 8 or 10% in the month. That's a bit questionable, but in terms of the drawdown stat of no more than 5% daily drawdown and 10% max drawdown, I know that some differ depending on the company, but generally speaking, these are very good parameters to try and educate your trading. That being said, one of the biggest pitfalls here in terms of the prop firm model is that it's constantly reset on a monthly basis, and therefore it means that your mental cycle only works in monthly circles. The second thing that is really overlooked is this premise of whose money is it that you're trading. People seem to put in £600 for, say, a 100k challenge, but then think that they've got 100k when they really haven't. The reality is you don't receive your funded amount until you pass both the challenge and the verification, according to most models. You don't even receive your challenge feedback or any profit until you actually have a profitable month after that. But if you look at what you've got access to in more depth, and we'll go with the FTMO stats to keep things simple, is that if you're risking 1% as a standard, you have 5 consecutive losing trades that you're able to take in a day before you bust the daily drawdown limit, which isn't really a problem in my opinion. But also you've got 10 consecutive losing trades that would take you out at 1% risk. Now, I agree that if you are a decent trader, these drawdown stats should not be a problem, but the thing that I want to put the lens on is the fact that if you are risking 1% of the total capital, you are actually risking 10% of what the amount you've got to play with, i.e. you can only lose 10,000 on a 100,000 account, so therefore you've actually only got $10,000 that you have completely free reign with. So in essence, in terms of what you're actually trading, and if you're able to do that effectively, you're ultimately taking 10% risk per 1% of the larger capital. Now, the other point is that you are actually paying for that, and it is your money. You've got a fictitious amount of 100,000 in your challenge and verification account, for example, but you have paid your £600. So in essence, you are paying that £600, and yet you are only allowed to lose 10% of it. So put it this way, you've paid £600 for a challenge, but let's say you just put £600 in an account. You're essentially limiting yourself that if you did drop 10% to then down to £540, you'd actually lose the rest of the £540. And in the challenge model, people don't seem to care because they see it as an education, and they come up with every single excuse or rationale behind it because they feel that it's putting them in the right light, they feel that they can do it. But in reality, over 80% of people don't even pass the first stage. And then what happens is the loop gets into place. So you start buying cheaper challenges or trying different providers, blaming the drawdown stats, blaming slippage, or blaming the spreads, or whatever it may be is the reason that you are giving that you aren't able to pass. But in reality, when you actually look in, and I've done plenty of surveys, so few people have actually traded on a live market with live capital before trying to pass all these challenges. So what is my proposed route and why? Now, I've said this in quite a few videos previously, but I've just made this one dedicated to it. I believe that you should take your challenge fee within reason. If you can afford a 50k or 100k FTMO challenge, there is no reason why you shouldn't just put that into a personal account on high leverage. Now, I've got a recommendation for the broker that I've used for my small account challenges and that I still use today in the description below. Now, that will go up to 1 to 500 leverage, which is absolutely ample for smaller account sizes that we're talking about, if the equivalency here. So these are the steps. You open that high leverage account, you put in what your challenge fee would be into that account. But the maths behind it is what I want to try and sell here. So let's say you put in your £600 that you were going to pay for the FTMO challenge. Well, instead of only getting the 10% wiggle room, you've actually got ultimately 100%. Obviously there's going to be margin in there as well, so we can't really factor it in. But let's just say you've probably got the openness of around 90 consecutive losing trades before you were to lose all of your money, as opposed to the 10 that you would get if you were trying to go onto a challenge. Obviously at the assumed risk of 1%. Now, if you've got an account smaller than £600 in that personal brokerage, obviously your risk may need to go up to 2% because the minimum lot size may be a bit too high. But realistically, you should be able to get away with a normal trading style of risking no more than 2% on that personal account. So in essence, this would give you 40 consecutive losing trades, as opposed to the 10 that you would get on the FTMO challenge. The other point of this as well is to prove that you can actually hit the parameters. The moment you don't hit the parameters with FTMO, you either get a free retake, or if you violate any of the drawdown stats, you end up having to pay for the whole thing again. So just set this, you've invested £600, maybe you make a few stupid mistakes, which is what a lot of people do. If you then lose 10% of your £600 on your personal account, you still have 540 left. You could at that point decide, actually, I want to take the £540 out, it means more to me, this trading thing isn't for me, and you walk off into the sunset having only paid £60 for the lesson. Alternatively, you can carry on trading because you've got a lot more buffer there where you can keep learning more lessons trading in live market conditions. And then the other option is, of course, that it's all gone by that point on a challenge model. Now, the reason I suggest doing the personal one is A, to prove that you can hit the stats, and also you make a bit of cash in the meantime. Really, in order to get to the optimum amount of confidence when taking these challenges, you need to have seen yourself do it on live conditions, not demo conditions, but live conditions with your own money and live capital. I feel like at the moment people have got an allergy to personal accounts. I don't know what it is, and I don't know why everybody keeps favouring these funded prop accounts, but people that aren't even able to make money on a personal account are trying to pass these challenges and just wondering why they're not getting there to the full payout. And my final reason for this approach is the fact that you don't want to be a prop trader your entire life. You have to pay parts of your payout, which I know doesn't sound much if it's at 80 or 90%, but it does rack up over time. Some people, depending on the country that you are in, are using different currencies, so you have to take into account the conversion, and then you get hit with tax, and usually, due to the nature of this being a self-employed business, you're going to get hit with much larger income tax if you're a sole trader, and even if you're going through the corporation route, you're still going to be paying corporation tax plus any income or dividend tax in the way that you would relieve it in the UK. So even if you are just trading your own personal account, whether it's spread betting or even a CFD account, your tax liabilities are always going to be far less if you're just going down that capital gains tax route. Of course, there's going to be varieties depending on if you are a fully fledged professional trader, you've been doing it for years and years and years, but I think for the majority of people in the video that this is targeted at, that isn't going to be the case. So look, in short, do not just run headfirst into this prop firm model and just keep buying challenges over and over again because you feel that that is the only way to emulate live market conditions. If you are in a position to afford a 50k or 100k plus challenge account with FTMO or the equivalent, then you put that into a high leverage personal account, you trade it yourself to know that you can pass the parameters, and it also gives you a lot more breathing room with your cash. And the other final point on this is that you will always have access to your capital. If you get 100,000 in prop firm cash, you can't just withdraw 100,000, you just make the proceeds from it. With your personal account, at least on a rainy day or worst case scenario, you're able to withdraw the amount that you are trading from. But this is just my opinion. I'd love to hear your opinions in the comment section below. It's been a while since I've been here on YouTube. I appreciate this video will probably get a little bit of heat, but I am nonetheless super interested in what you've got to say. But if you have enjoyed this video, or if you haven't, then make sure you hit the likes up button, hit subscribe if you aren't already, and make sure the alerts are turned on so you don't miss when I post my next one. Hopefully that will be a bit sooner than the gap it took to make this. With that being said, have a wonderful rest of your day, and I'll catch you on the next video. Take it easy.